Hi everyone, this is a technical analysis on gold. Let's start with a fundamental overview first. Yesterday, gold broke out of the recent range and extended the rally following some weak US data. In fact, continuing claims rose to a new high and the SM Services PMI hit a new cycle low. That made the real yields to drop and gold to accelerate to the upside. This has been the case for a couple of years now, where a rise in real yields sees a much smaller fall in gold compared to a fall in real yields, which triggers a bigger rally. As of now, it looks like gold have limited downside but lots of upside as inflation abates slowly, while risks to the growth picture increase the longer the Fed keeps policy restrictive. In the short term, strong US data might weigh a bit on the market, but in the long term, weak data is likely to trigger bigger upside moves. Now, the daily chart. We can see that gold continues to maintain an overall range-bound price action, although the bias remains bullish. From a risk management perspective, the buyers will have a much better risk-reward setup around this key 2,277 support zone, but we can also find the 38.2% Fibonacci retracement level for confidence. The sellers, on the other hand, will want to see the price breaking below this support to change the bias and increase the bearish bets into this next support around the major trend line, although we will need very strong US data to trigger such a big correction. On the 4-hour chart, we can see that the price yesterday broke out of this recent range between the 2320 support and the 2337 resistance and extended the rally to the 2360 level as the buyers piled in on the breakout and increased the bullish bets on the weak US data. If we get a pullback from here, we can expect the buyers to step in around the 2340 level, where we can find the confluence of the previous resistance now turned support in this minor trend line. The sellers, on the other hand, will need to see the price falling below this 2320 level to turn the bias more bearish and extend the correction into the 2277 support. On the 1-hour chart, we can see that the price action is now confined in what could turn out to be a bullish flag. A breakout to the upside will likely trigger another extension to the upside, with the 2387 level here as the first target. A breakout to the downside, on the other hand, should provide a pullback into the 2340 level next. These red lines define the average daily range for today. Tomorrow, we conclude the week with the US NFP report, where the data is expected to show 180,000 jobs added in June and the unemployment rate to remain unchanged at 4%.